Hi everyone. I want to do a video on petty cash. Petty cash, unless you're specifically handling petty cash a lot in a future position, it's not the hugest part of accounting, um, but it is part of the course. It's good to learn just to get an idea for. So I'm going to go through a very similar problem, a practice assignment that'll help you with your actual assignment for the week. Um, so just to go through, we're dealing with April, the month of April. I kept the same name as your assignment, but everything down here, the amounts are changed. And we're going to go through it, and I'm just going to show you how you tackle having petty cash like this. Okay. So the first thing, April 3rd, you wrote a check, a $400 check, cashed in and gave the proceeds and the petty cash box to Chloe Addison, the petty cashier. So what is petty cash? Petty cash, real briefly, is petty cash, real briefly, is a little stash of cash. Usually, it's not too much money. $400 is honestly pretty big for it. Normally, you're looking at like $100, but it could be more, could be less. Where someone is in charge of it for the office if they need quick supplies. So normally, when you're a business, you order supplies through another company. They send you an invoice, you pay them cash, or you put it on your credit. But petty cash is, what if I need to pay the postman who just came with an expensive delivery? What if I need to go and just get staples real quick from the store? And you don't have your head accountant around to process any of this. You just need a little quick money. That's what petty cash is for. So what you first do before we look at anything else is when you first initially write that check, what you're essentially doing is you're moving money out of cash and putting it into petty cash, which is an asset account. So you see, I made the journal entry already, but you would debit petty cash. So it's just a different specification of cash itself for the $400. And then you credit cash to show you're taking it out of the actual cash account for $400 and you're putting it into petty cash itself. Okay. Next, what you do, so a whole month goes by. You see, April 7th through 30th, we have a whole month of spending this petty cash money. So what happens is, as each thing goes by, what you want to do is you want to organize what you're spending this stuff on. Okay? Because you're going to have to put these into specific expense accounts at the end of the month. So we look at it right here. Purchase bond paper for the copier for $17. That is immediately used. Okay, so it's immediately used. Bond paper, it's paper. Normally that's a supply, but since it's immediately used, it's not going to go to supplies. It's just going to automatically be expensed. So down here, this is what your assignment will look like. There's already categories made for you. You just need to look at all the transactions up above and categorize them. So bond paper, you could just put paper is an office supply expense. You see the ones we have here, we have delivery expense, mileage, postage expense, merchandise inventory, transporting in, office supply expense. So the paper was $17. Okay. Go up. Don't worry about anything else. Just take it line by line. Paid $32 COD shipping charges. COD means cash on delivery. So that's a shipping you have to pay. It's a special kind of shipping where once it arrives to you, the buyer, you pay for the shipping right then and there. You don't see it often, but it's used in this problem to show you what petty cash. So you're sitting in your office. Here's a delivery. How are you going to pay for that delivery? You don't use your own money. You use the company's money in petty cash. So $32 cash on delivery, COD, shipping charges. So this is merchandise inventory transported in. Okay. COD delivery. I'll just put that. You could be as specific as you want. Just be somewhat specific. So when I'm checking it over, I could see, if you went wrong, why did you go wrong? 13, April 13th, paid $10 postage to express mail contract to a client. I feel like I can't talk today. All right, so pay $10 postage to express mail a contract to a client. So go down here. Okay, look at that. We have postage expense. Okay, I'll put express mail, $10. All right, so far we got 3 things accounted for. Okay, we're going to go up. And you can put the date. I'll be a little faster in this video to save upload time. But, put the date next to it. So this happened on the 13th. What date did this happen? What date did this happen? To keep it neat and organized. All right. April 15th, we reimbursed the manager $86 for business mileage on her car. So go down here, look at that. We have mileage. So manager mileage, I'll put, you can put whatever you want. That's at least somewhat specific, $86. Put the date next to it. April 21st, purchase stationery for $75. That's immediately used. That's the same thing like the paper. Normally stationery goes to supply, which is an asset, but we're using it immediately. So it's actually immediately going to be an expense. So stationery is office supplies, but office supply expense because we're using it right away. April 24th, we paid a courier $34 to deliver merchandise sold to a customer. Terms or FOB destination. So we're paying a courier $34. Here's, it could get a little choppy. This is why I'm showing you the example. If you want to say that that's postage or transportation for inventory, you have the argument. Specifically, though, it's a delivery expense because you're delivering merchandise to a customer. So right here, under delivery expense, I would put delivery to customer, and it's that $34, I believe I made it. Okay, yeah. And it already had the date here, April 24th. But again, put your dates next to everything. Next, we're looking, paid $14 cash on delivery, shipping charges on merchandise purchased for resale. So it's the same thing as we did earlier. It's $14 COD delivery. Put your date next to it so you could specify, when did this one happen? When did this one happen? But again, we're just organizing. April 29th, paid $56 for postage expense. Okay, so we have a postage expense category. I'll just put postage, $56. Right, that's what I made. All right. Now, if you look on the 29th, it says the fund had $40 remaining in the petty cash box. So this is telling you after you've made all your purchases for the month, there's $40 left. We're going to put this on pause. There's no more transactions we had with petty cash. This is just kind of FYI statement number 30. We're going to do something with them. Just first, we're going to come down to our postage petty cash expense summary report, and we're just going to total all the expense accounts. So the delivery expense only had one transaction, so $34. Mileage only had one transaction, $86. Postage expense had two. If you want to make a formal calculation, do that. You could have just added that one. Merchandise inventory transport in, it's $32 and the $14, so we're looking at $46. And then down here, we have the office supplies expense. We had two of them, and we're looking at $92. Okay, so it totals it up for you. It should total it. If it doesn't, just do your own calculation here for your total reimbursement. So the purpose of this is, one, you want to recognize the actual expenses. Okay, we're going to do that with journal entries below. But we also want to refill that petty cash, drawer or chest box, however they give you the petty cash. Usually it's kept in like a lockbox. Okay, so we want to reimburse it. So we spent $324 on petty cash stuff for the month of April. Now, up here is where number 29, or April 29th, comes into play. So we spent $324 from petty cash. We initially put in $400. So if we put in $400, we spent $324, we should have $76 remaining, or should be at least. But April 29th, we looked through the fund and there's only $40 remaining in the petty cash box. And so we should have $76, but we only have $40. That's an issue, and that's more internal controls, talk to your manager, figure something out. Why is their money missing? But for accounting purposes, we actually have to make a journal entry for this difference. So we should have $76 left in petty cash. $40 is actual amount remaining. So we have to find the difference. So we should have had 76. We actually have 40. $36 is missing. And specifically, since we have less money than we should have, this is called a shortage. So we have a $36 shortage. Okay. So keep that in mind. We don't put that anywhere in the expense report. We don't have to. I mean, if you wanted to, you could, but you don't have to. And now what we're going to do is we're going to come down to our journal entries. This is February. This should be April 30th. We're going to come to our journal entries, and we're going to start putting in all these expenses. So remember, when expenses are recognized, they're debited. And note, we're not doing this on each specific day these things happen, because it's petty cash. That's what petty cash is for, just to cover you for the month. Okay, and then at the end of the month is when you recognize your expenses for all this stuff you spent. So that's why this is one big journal entry on April 30th. We're going to debit delivery expense. Okay, we're just debiting the totals, 34. We're going to debit mileage, 86. We're going to debit postage expense, $66. We're going to debit the merchandise inventory, you could abbreviate, expense, $46. We're going to debit office supply expense, $92. Okay. A quick aside, merchandise inventory transport in, it could be an expense, so merchandise inventory expense, or it could actually just go to the inventory account and increase that account. So instead of the expense, you could put it as merchandise, you could spell it right. Then you could put merchandise inventory. So for this assignment, it's really up to you. Honestly, the more preferred way is to put it as merchandise inventory. I got carried away with my expenses. Mileage, I'll specify as an expense. But, just so you know, it's up in the air. So we listed all the expenses. Okay, now just to show that you did it right, the sum is 324, which is the total here. Now you can't do anything else until you recognize this shortage. So $36 is missing. It's considered a shortage. It's when you have a shortage, it's considered like an expense. So you're going to debit this cash over / short account. Okay, and you're going to debit it for, I just said it 50 times, $36. Okay, so notice this is called cash over short. So when it's a cash shortage, like we had up there, so when we had less money than we should have had, you debit cash over short. Now there could have been a weird circumstance. It could happen where maybe we had, $50 remaining, and we should have had, no, I'm sorry, where we should have $50 remaining, but we actually have $80 remaining. So we have more remaining than we should have. That's called an overage. So we would have a $30 overage there, and we would credit that to cash over short. Okay, it's one account that does both jobs. Okay, it's like a balancing account. It helps you balance your petty cash. And then what you could do is you're going to credit petty cash, and it's going to be for this. I'm sorry. You credit cash, just cash. Okay, and it's going to be for this combined amount. See, I'm trying to make this a quick video, one for you guys and one for me when it comes to uploading. So it's going to be for $360 that you credit cash for. So you never actually credit petty cash. Even though you're using petty cash funds to pay for all these expenses, you credit cash. And what's going to happen is you're writing out a new check for cash for $360 that's going to go into your petty cash fund. Okay? So petty cash, once you initially debit it, unless you want to add more money to it, this is the only entry you touch petty cash for. And if you, when you're doing this, you see how I made the entries over here. It looks like you could have moved them over if you wanted, but this is fine right here if you want to do it this same setup. So that's for the whole first journal entry. And I put the cash over shortage because you will need it to do your assignment. There's going to be a similar scenario. Okay. So we credit cash for $360, and that's perfect because when you debited petty cash initially for $400, that's the balance you want to keep in there. We have $40 actually remaining in there, so to bring it back up to the $400, we needed to credit cash $360. We need to take $360 out of cash for the petty cash. Okay, and the reason we're not debiting petty cash for $360 is because we never actually credit petty cash when we're spending all this stuff. Okay, so it doesn't need to be debited again. Now, if you look at April 30th, though, the petty cash fund amount is increased by $50 to a total of $450. Now, we're going to make a journal entry just like we did when we first made it. We're increasing the total amount that petty cash has by $50. So now we are going to go, I don't know why this is February, April 30th. We're going to debit petty cash $50. We're going to credit cash $50. Okay? And that's petty cash. Again, you can even see me. I'm getting slipped up just because I'm saying petty cash, petty cash. Just separate it. It's just organizing cash. You're taking a little bit of cash, giving it to someone, usually like a manager, someone in charge, so they could buy small day-to-day stuff. And then at the end of the month, you're putting what you spent to expenses, and you're refilling the petty cash by crediting cash. And that's it. So if you have questions, let me know. I'm going to end this now and upload it.